In today's video, I'm going to share with you a simplified and very basic strategy using one indicator that allowed us to capitalize over $7,000 in profit trading gold. Now, as we do with all of our videos, we're going to hop in the charts and we're going to show you what we found for our entries, review the live trades, and reveal what we did to guarantee our profits until our trade closed. If you're a beginner and you're new to trading, this is a video you don't want to miss. Hit the like button, subscribe to our channel if you gain any value. But without further ado, let's hop in the charts and get started with today's video. All right, folks, if you have any questions or need help, feel free to comment down below. But if you want to reach me more directly, either via email or Telegram, you can access my official contact information down below in the video description. And while you're down there, check out our trading resources, including links to free demo accounts, brokers, and prop firms that I use specifically for trading gold that provide various benefits, including up to 90% payouts, our VIP signals chat, so you can follow, copy, and profit from my own personal trades, auto trading, where the trading is done for you, allowing you to earn passive profits in the markets. And we also have our trading group where I personally teach how I trade these markets, as I'm about to show you today, so you can learn and make money as you are learning and improving on your skills. All of that and much, much more can be found down below. But moving forward, the purpose of today's video is to show you the value of applying very basic and rudimentary concepts of trading when done properly can allow you to capitalize profits in these markets. I'm sure many of you are aware there's a lot of videos out there about institutional concepts in regards to imbalances and order blocks, and those are very effective methods, but also can be a bit confusing for the average trader. This causes a lot of people to stress themselves out and neglect the basic concepts that could allow you to be just as profitable as those more advanced concepts. So I'm not here to just show you that I made $7,000 trading gold. I'm here to show you how I made $7,000 trading gold following basic entry-level rudimentary concepts of trading that we as traders must learn and understand. So as you can see, we entered for a sell for gold at around the 2630 level. And there are many reasons why we took this trade. Looking at the chart, we can see that the structure is relatively bullish. If we were to apply an ascending trend line, price is creating higher highs and higher lows, implying bullish structure. However, one of the first reasons that confirmed our bearish bias for a sell was the fact that price was reacting at a level of resistance. And when we zoom out even further, not only can we confirm that the overall structure is bearish, but that level of resistance also served as previous support. But coming up to the 1 hour time frame, our point of entry here at 2630 was also a retest of a descending trend line that we had identified from this previous peak created back in October. From here, we have one touch, two touch, followed by a trend breakout, came down to retest that descending trend line as support until eventually breaking through. So when we come to our point of entry, our entry is retesting our descending trend line as a form of resistance, which also complements this level of resistance that, again, we established was also previous support. And when we look at this from a macro standpoint on the daily, price is failing to break through our descending trend line. So from this point, we have multiple levels of confluences confirming our bearish bias from our resistance and descending trend line. But there was one final caveat that solidified our entry, and that is the divergence that we identified between the RSI and the markets. Again, this is our point of entry. So between these two levels, price is creating higher highs, but the RSI is creating lower highs. So when we come down to our entry time frame, not only do we identify the bearish divergence from the 1 hour, it was also confirmed on the lower time frame at our point of entry. Price is creating higher highs, our RSI is creating lower highs. Combining this final factor with all the other confluences that we identified further solidified our reasoning for entering for a sell at the 2630 level. Here's our entry with take profit levels down in these lower regions. As the trade progressed, we moved our stop loss into profit. So in the case price were to reverse, it will close out our trade guaranteed in profit. We did this a couple of times until eventually price hit our initial take profit target at the 2612 level for about 180 pips, allowing us to capitalize over $7,000 in profit. And by the way, this is also the same setup that I shared for my students and members in our VIP, with deeper take profit levels around the 2604, 2608 level, if I'm remembering that correctly, allowing our students and members to capitalize on much deeper profits from this setup for over 200 pips in profit. Now, as a side note, for those of you who like to apply those more advanced concepts of imbalances and order blocks to your trading, here's a prime example of an imbalance filled, which created that resistance level at our point of entry. Here we can see a drop in price back in mid-December, which created this large imbalance, which wasn't fully filled until much later when price came up to that 263 level at our point of entry. As price filled this imbalance, it created that level of resistance, which again we established was previous support. So this is why I say imbalances and order blocks are just fancier institutional methods of support and resistance, but at the end of the day, they're virtually the same thing. And again, combining the fill of that imbalance, which aligns with our descendant trend line, all the more reason why we took that sell. Don't overwhelm yourself or stress yourself out with trying to learn every single concept of trading. Start with the very basics, which as you can see are very effective. And then you can decide from that point if you want to incorporate other more advanced concepts to your trading plan. At the end of the day, trading does not have to be overcomplicated unless you make it complicated for yourself. Find what works and stick to it. This is one of the many concepts that I teach within our training group, alongside with dedicated modules on my own personal strategies on how I trade gold, as I shared with you today, allowing beginners and struggling traders to make money as they are learning and improving on their trading skills. So if you want to learn more about our training group and our VIP trading room, you can visit our website or click the links down below in the video description.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.